Welcome back to my channel, The Market with Gurvinder, and we're going to continue our weekly topic here on interest rates, inflation, what the central banks are doing, and obviously how this is affecting assets, especially home prices and home sales. So definitely stick around. There's a lot to cover in this video because it seems like every week is a big week in terms of news and things that are coming out in the market. And I'll definitely share some numbers with you from home prices, how they've changed since last year, and obviously month over month. And also I'll share a little bit about home prices or home sales, I should say, in terms of the difference given what's happening in the market. Just before we begin, I always say, this is not financial advice. I am a wealth management advisor. This is something I spend weekly, daily researching and studying this material. So if you're looking for advice, I always say reach out to your financial advisor, someone you trust, and someone you can work with. Because I'm going to share with you my perspective and obviously the perspective of the authors here and where I'm pulling the article. So without further ado, let's kick it off here. I just want to touch up on this briefly. This is from Reuters, June 21st article. Fed to lift rates by 75 basis points in July and another 50 basis points in September. So this refers to the U.S. Federal Bank. They're also on the same path. They just raised by 75 basis points, and now here, based on this article, says the Federal Reserve will deliver another 75 basis point interest hike in July, followed by half a percentage point in September, and won't scale back to quarter point moves until November at the earliest, according to economists polled by Reuters. So again, that same conversation. What I really want to share with you here is that this storyline is not going away until inflation is addressed. This is going to be a constant conversation. You're going to hear from me, and obviously what you're going to hear in the market, because that's the number one focus of central banks. Just based on that, this is from BNN Bloomberg. This was an article from this week. This one says JP Morgan sees material risk of full point hike from Bank of Canada. So this is June 22nd article. So the next Bank of Canada decision is July 13th, and they're thinking about, it seems like 0.75 basis points for sure. If they go to full percentage points, I've never seen that, at least as I can remember. So it's going to be something, interesting, and obviously it's really going to take notice. So let's kick it off here. The possibility of a full percentage point increase rate hike from the Bank of Canada July meeting is now firmly on the table, following the latest inflation data from May, according to strategists at JP Morgan. The pace of inflation is clearly not letting up, and the Bank of Canada must demonstrate its resolve and move more aggressively. In our view, to tame inflation pressures, the strategist said in a report on Wednesday titled Canada CPI Get Out the Oven Mitts. We now see material risk that the bank will announce a 100 basis point increase in July. That would be just absolutely crazy. Statistics Canada reported Wednesday that consumer prices rose at the fastest pace in almost 4 decades, at 7.7% annualized in May. The price increases were broad-based, with gasoline leading the way. This May headline number was an acceleration from the 6-point increase for inflation from April. So inflation came out this week. It was also 7.7%, crazy, the highest since 1983. So again, what I've been saying is all central banks, one of the key objectives is inflation. Inflation has been running hot, and they really, really got to get a hold on it. And obviously that's affecting all sorts of the market in terms of what's going on. And just jumping to this article here from June 23rd, also from Reuters, in Canada, hot inflation opens rare attack on central bank. So right now the central bank is being judged, is being criticized, saying, hey, why didn't you do something sooner? Why did you let this run for so long? And this article obviously touches on what they're hearing in terms of the market. So the Bank of Canada has come under pressure from critics after misjudging inflation and locking itself into rigid forward guidance that prevented it from reacting swiftly as prices and Canada's economy began to overheat. One of the world's leading central banks is now being forced to play catch-up, hiking interest rates more aggressively than originally expected, just as Canadian household debt levels hit a new high, and they're obviously surging above the G7 nations. With a possible recession looming, the bank is facing questions from politicians, economists, and even the general public about the opacity of its decision-making process, and renewed calls to release minutes, a common practice many, amongst its peers, like the Federal Bank of U.S. does. For its part, the Bank of Canada has admitted to missteps and is promising more transparency, including analysis of inflation forecast errors due in July. But it's still facing attacks from the politician Pierre Poilievre. He's the front runner to potentially lead the opposition party, Conservative Party. So he's obviously, taking advantage of this opportunity to really say, what are you guys doing? And obviously the general public and even myself, I find myself asking that question, like, you should have seen this. And obviously inflation is not temporary, it's obviously sticking around. And then that obviously affects, what's happening in the housing market as they raise interest rates. Home prices were already unaffordable, and now people can afford less to take on less debt. So let's look a little bit of this. Nearly half of Canadian renters expect to stay tenants indefinitely. This is a survey that was done recently. So almost half of Canadians who rent say they will continue to do so indefinitely and aren't sure when they'll be able to get into the housing market, says a new survey. Renters surveyed by insurance firm Canada Life cited a lack of cash, fear, and uncertainty as reasons for staying on the sidelines, with almost 73% saying it's a bad time to buy a house and 17% saying they'll never buy one. 91% of renters surveyed believe buying a home is getting harder every year, and 89% expect the next generation to even have a harder time getting into the housing market. While 79% of respondents, believe home ownership is a good investment, 64% don't think they'll be able to buy a home unless they have financial support from other family members. This survey was conducted, May 5th to 11th. I also find Canadians between 25 and 29 are 2 times more likely to continue rent compared to those aged 30 to 49, as you already know. So renters are obviously feeling that. They're saying, hey, let's stick around. That's why a lot of buyers have stepped on the sideline, because they're like, maybe it's not the right time to buy. Let's see where interest rates go. And obviously it makes a difference in terms of what we're seeing in participation from the market. This next thread or tweet here is from Gina. She's a real estate agent here in the GTA. And this is some of the data and what I was sharing with from pricing data, what we're seeing for homes. So I'll make it bigger. So I'm pretty sure we can call it for the month with 5 days left. What do you think? What do you think? What do you all think at the state of the market? Detached median home prices across the GTA. So this is data from the Habitat. And let's open it up here. So these are detached prices, and it's obviously by the regions: Durham, Halton, Peel, Toronto, and York. And you can see here this, the selling price, the previous month, and month over month, and obviously you can see the numbers are down. And you can see on an annual basis, look at Halton. Their previous price or the selling month is 1.3 million, and they're down 1.2% year over year. You can see the other regions are still holding up. Obviously PO 8.4, Durham at 4.4%, Toronto at 2.6, and York at 5.3. So you can see home prices are down. It looks like they're going to continue to go down, as I was sharing with interest rates, because remember, interest rates go up, financial assets prices come down, just like home, stocks, and crypto. We've already seen that. So obviously home prices are selling for less, which means, again, buyers are on the sideline, sellers are still trying to figure out what their sweet spot is in terms of what they can get for their home. So it's a very interesting time in the market. Lastly here, another tweet here. This is from following a popular group, Toronto Housing Market Bubble. Obviously the name says it all, but I'm just going to share a little bit of the data here. So GTA May home sales down 40% year over year, and 26% the 10-year average. Low rise down 62% from last May, and 58% below the 10-year average. Condos down 31% from May 2021, and 10% below the 10-year average. So what do you get from that? Home sales are down drastically year over year, and obviously they're very below the average. So you can see this tells you everything from the pricing, from the number of home sales. The housing market, it's soft. It's most likely going to get softer. Obviously, if you're an investor in stocks and crypto, you can see that already in terms of what's happening or has happened with prices. So this is the video for the week. I hope you found it helpful. 3 things I want you to take away is inflation is continuing to grow. Obviously, the prints keep coming month over month, and they're getting bigger. That directly interrelates to the federal or central banks. They're going to continue to target inflation. That means raising interest rates as the tool, and they're not going to stop until they get a hold of inflation. Inflation tries to go down. And the third thing is buyers and sellers. It's a very tricky market. Buyers on the sidelines. There's obviously more inventory of homes on sale, but we can also see averages are down for home sales and home prices, as we're just looking at. So again, any questions, any comments, please leave it below. All the articles, all the information will be in the description, so you can read at your convenience, and if you want to learn more. And if any questions for me, always reach out, guys. Thank you so much for watching. I hope you appreciated the video and found it helpful, and we'll talk very soon. Thank you.